Last week's ceasefire announcement sent oil prices plunging by over 15%, the biggest single-day drop in the last 35 years outside the COVID-19 pandemic. Global equity prices rebounded sharply as markets quickly repriced lower downside risk. However, as we've seen in the hours and days since, risk remains in both directions. The outlook for global energy markets, and thus also for financial markets, will likely depend on whether or not oil and gas supply resumes flowing through the Strait of Hormuz, the narrow waterway between Iran and Oman that handles about 20% of the world's oil supply. Although further geopolitical surprises may still arise, and although energy and financial market volatility may continue, we still emphasize our core view that long-term investors are best served by focusing on time in the market rather than timing the market to try to benefit from or avoid geopolitical-driven market volatility. Last week, we saw consumer price inflation surge in March as a huge increase in energy and commodity prices found their way into consumer prices. The big question going forward, though, is whether this is going to be a one-time price shock or if it's going to have longer-lasting and broader effects on prices outside of just energy and commodities. This week, financial markets will take a look back inward as about 30 S&P 500 companies, including many large banks and financial institutions, will report their Q1 earnings. Markets will be particularly attuned to how C-suite commentary characterizes the ongoing geopolitical and energy price shock. The market consensus has stayed fairly optimistic, so investors will be looking to see if leadership of big U.S. companies shares that view. A couple surveys and anecdotal reports will be interesting to see this week. On Tuesday, the NFIB Small Business Report will include plenty of anecdotes and data points for how the energy shock is affecting business decisions. And on Wednesday, the Fed's Beige Book report will give similar economic and financial anecdotes from each of the Fed's 12 regional banks. Lastly, on Tuesday, we'll see the Producer Price Index report for March, which may show a very sharp increase in the price of some inputs. There's little historical precedent for the ongoing energy and commodity price shock, and data points like this will help point analysts and investors in the right direction. So, things to watch this week: ongoing developments in the Middle East, Q1 corporate earnings releases, small business and regional Fed anecdotes, and producer prices.
The views expressed are solely those of the authors and do not necessarily reflect the views of First Citizens Bank and Trust Company or any of its affiliates. This material is for informational purposes only and is not intended to be an offer, recommendation, or solicitation to purchase or sell a specific investment strategy, any security, or insurance product, and should not be construed as legal, tax, or accounting advice. Please consult with your legal or tax advisor regarding the particular facts and circumstances of your situation prior to making any financial decision. While we believe that the information presented is from reliable sources, we do not represent, warrant, or guarantee that it is accurate or complete. Many companies referenced in this content are independent third parties and are not affiliated with First Citizens Bank and Trust Company. All third-party trademarks referenced, including logos, trade names, service marks, and icons, remain the property of their respective owners. Your investments in securities and insurance products and services are not insured by the FDIC or any other federal government agency and may lose value. They are not deposits or other obligations of or guaranteed by any bank or bank affiliate and are subject to investment risks, including possible loss of the principal amounts invested. Past performance is no guarantee of future results. Estimates of future performance are based on assumptions that may not be realized. This material is not a solicitation of any offer to buy or sell any security or other financial instrument or to participate in any trading strategy. Diversification does not guarantee a profit or protect against loss in a declining financial market. First Citizens Wealth is a marketing brand of First Citizens Bankshares Incorporated, a bank holding company. The following affiliates of First Citizens Bankshares Incorporated are the entities through which First Citizens Wealth products are offered. Brokerage products and services are offered through First Citizens Investor Services Incorporated, FCIS, a registered broker-dealer, member FINRA, and SIPC. Advisory services are offered through First Citizens Investor Services Incorporated, First Citizens Asset Management Incorporated, and SVB Wealth LLC, all SEC-registered investment advisors. Certain brokerage and advisory products and services may not be available from all investment professionals, in all jurisdictions, or to all investors. Insurance products and insurance are offered through First Citizens Investor Services Incorporated, a licensed insurance agency. Banking, lending, trust products and services, and certain insurance products and services are offered by First Citizens Bank and Trust Company, member FDIC, and an equal housing lender and First Citizens Delaware Trust Company. For more information about First Citizens BancShares Incorporated, its subsidiaries, and its investment professionals, visit www.firstcitizens.com/wealth/disclosures.